Hi guys, we are the Marvelous FCPAs and today we're going to discuss the Chapter 3 Revenue from Contracts with Customers. PFRS 15 is intended to provide an overview of applying PFRS 15 within the industrial products and service sector. PFRS 15 applies to all contracts with customer except leases under PFRS 16, insurance contract under PFRS 17, and financial instrument under PFRS 9. The core principle of PFRS 15, an entity should recognize revenue in a manner that depicts the pattern of transfer of goods or services to a customer, and the amount recognized as revenue should reflect the consideration to which the entity expects to be entitled in exchange for good or service. These are the 5-step model of PFRS 15. Let's talk about the step 1. Identifying the contract. A contract has 5 criteria, which are the contract must be approved, rights and obligations of the parties are identified, the contract must indicate the payment terms, it has commercial substance, and collection of the consideration must be probable. Next is the step 2, which is identify the performance obligation. So what is performance obligation? It's a promise to deliver good or service in a contract with a customer. A promise constitutes a performance obligation if the promised good or service is distinct. So how can we say that a good or service is distinct? First, the customer can benefit from the good or service, and the second one, the entity's promise to transfer the good or service to the customer is separately identifiable from other promises in the contract. Let us now move on to the step 3, which is determine the transaction price. So what is transaction price? Is the amount of consideration in a contract. Next is the step 4, which is the allocation of transaction price. Standalone selling price is the price that the entity would sell a promised good or service separately to a customer. The best evidence of this is an observable price of good or service when sold on a standalone selling price is not directly observable. The entity must estimate such price by using the following methods. The adjusted market assessment approach, wherein the entity refers to prices from competitors for similar goods or services adjusted for a specific cost or margin. The expected cost plus margin approach, wherein the entity may forecast expected cost to satisfy the performance obligation adjusted for an appropriate margin or profit. And the residual interest approach, it may be used only when either the selling price of the goods or service is highly variable or is uncertain. Let us now go on to step 5, which is the recognition of revenue. So, when the revenue recognized? When an entity transfers control of the goods or services to a customer. Control of an asset is the ability to direct the use of the asset and obtain substantially all the benefits from the asset. Revenue can be recognized either at point in time or over time. Measuring progress towards complete satisfaction of performance obligation. Ito ay pagsusukat ng pag-usad patungo sa kompletong kasiyahan sa pagganap. Gumagamit ang entity ng isang paraan ng batay sa mga gastos na natamo upang masukat ang pag-unlad nito patungo sa kompletong kasiyahan sa pagganap. Output method, direktang pagsukat ng halaga ng mga produkto or serbisyo na inilipat hanggang ngayon na may kaugnayan sa natitirang mga produkto or serbisyong ipinangako sa kontrata. Example, ang mga survey ng pagganap ay nakumpleto hanggang ngayon. Disadvantage of output method, hindi direkta napapansin ang mga impormasyong kinakailangan upang mailapat ang mga ito ay maaaring maging napakamahal. Input method, sinusukat batay sa mga pagsisikap na pinahaba upang ganap na masiyahan ang isang obligasyon sa pagganap. Example, pinahaba ang oras ng paggawa at ginamit ang oras ng makina. Weaknesses of input method, not be a direct relationship between an entity's input and the transfer of control of an asset to a customer. Contract costs include incremental cost of obtaining a contract, cost to fulfill a contract, incremental cost of obtaining a contract, mga gastos sa pagkuha ng isang kontrata sa isang customer na ang entity ay hindi maaaring maganap kung ang kontrata ay hindi nakuha. Example, komisyon sa pagbebenta. Cost to fulfill a contract, kinikilala bilang pag-aari kung ang lahat ng mga sumusunod na pamantayan ay natutugunan. Example, direktang paggawa, sweldo at sahod ng mga empleyado na nagbibigay ng ipinangakong serbisyo ng direkta sa customer. Amortization and impairment, isang sistematikong batayan na naaayon sa paglipat ng mga nauugnay na kalakal or serbisyo sa customer. Ang amortisasyon ay na-update para sa anumang makabuluhang pagbabago sa inaasahang oras ng paglipat ng mga nauugnay na kalakal or serbisyo ng customer. Impairment loss is recognized in profit or loss as follows. Contract is presented in the statement of financial position as a contract liability or contract asset. Contract liability, obligasyon ng isang entity na ilipat ang mga kalakal o serbisyo sa isang customer kung saan ang entity ay nakakatanggap ng pagsasaalang-alang o ang halaga na dapat bayaran mula sa customer. Contract asset is an entity's right to consideration in exchange for goods or services that the entity has transferred to the customer when the right is conditioned on something other than the passage of time. Receivable, ang impormasyong pag-aari ng kontrata at impormasyon ng pananagutan sa kontrata ay binigay upang pagganahin ng mga gumagamit ng pahayag sa pananalapi na makilala ang pagitan ng mga matatanggap at mga assets ng kontrata. Illustration about contract liability. Ang sabi dito, si ABC Company enter into a contract to a customer on March 31. Pero dahil nga contract liability, nirequire ni ABC Company si customer na magbayad in advance ng 1K sa January 31. Sumang-ayon naman si customer at nagbayad noong March 1 bago yung pinagkasunduan nilang date or yung pag-transfer ng product. So ang requirement is provide the journal entries under each of the following scenarios: the cancelable and non-cancelable. January 1, 20x1 kay scenario A and B, wala pa parehas na entry dahil nag-usap pa lang sila dito or nagkasundo pa lang, wala pang nagpe-perform na obligation. And January 31, 20x1 kay scenario A, no entry. Kay scenario B, meron which is debit receivable na 1K at credit contract liability. Non-cancelable kasi kahit na i-cancel or pursue ni customer yung contract, the company is entitled for consideration. March 1, 20x1 under scenario A, contract liability is recognized when the advance payment is received. Under scenario B, non-cancelable, nakatanggap na si company ng paunang bayad na 1K, kaya debit cash at nabawasan yung receivable mula kay customer, kaya credit yung receivable. March 31, 20x1, same ng entry both scenario A and B. Mare-recognize natin siya as revenue when the performance obligation is satisfied or the goods are transferred to the customer. Additional concept related to Step 2, identify the performance obligation in the contract. Warranties, alam naman natin to na si entity na magpro-provide siya ng warranty sa customer para sa product na binili sa kanila, whether in accordance with the contract, the law, or the entity's customary business practices. Mayroong mga specification para masabi natin na yung warranty is part ng performance obligation o hindi. Una is whether the warranty is required by law, not a performance obligation. The length of the warranty coverage period. Performance obligation lasts the nature of the task that the entity promises to perform, not performance obligation. Principal versus agent considerations. When another party is involved in providing goods or services to a customer, the entity shall determine whether it is acting as a principal or an agent. Principal, kapag sinabi nating principal, yung nagbebenta mismo, yung gumagawa ng product na pinoprovide niya, nire-recognize nila yung revenue as gross amount. While kapag sinabing agent naman, para silang mga resellers or taga-arrange ng mga goods or services, mga taga-asikaso, nire-recognize nila yung revenue as commission fee. Material right is an option to purchase additional goods or services at a price that is less than what the customer would have paid if they had not entered into a contract. Material right o ang karapatan ng isang customer, buyer, or investor sa isang bagay. Halimbawa, may shares ka o nag-invest ka sa isang company. Ibig sabihin, you have a material right on that company. So, kung walang contract agreement sa mga customer, the entity is not obliged to perform an obligation or provide a material right sa customer. Here's is an example illustration for option that provide customer a material right. According to the problem, ABC enters a contract product sale for 100 pesos. That sale gives the customer 40% discount voucher for future purchase of 100 pesos in the next 30 days. On the other hand, a 10% discount is given by ABC as seasonal promo in the next 30 days, but discount cannot be used together. Requirement A, determine the performance obligation. Requirement B, allocate the transaction price to each of these obligation. Solution. Requirement A, first is compute for the incremental discount. 40% yung discount voucher minus natin 10% na discount on sales equal 30% incremental discount. Requirement B, allocation of transaction price. Yung product A, meron siyang standalone price na 100, allocation, kaya nakuha 89, 100 times 100, divide 112, discount voucher na 12, kaya yung nakuha 50 times 80% times 30%, as allocation, meron tayong 11. Total standalone price natin is 112, as allocation 100 pesos. Customer loyalty programs is a marketing strategy that rewards loyal customers that frequently engage in the entity. Customers earns award credits from his purchases. Points can be exchanged for free or discounted goods or services. Customer loyalty programs are incentives para sa mga loyal customers where they can earn points every time na bumibili sila sa isang company or establishment. One example nito is yung SM Advantage Card. Non-refundable upfront fees or near contract inception are generally related to initiation, activation, or setup activities for goods or service to be delivered in the future. This non-refundable fee is charged by an entity as part of compensation for costs incurred in setting up the contract. Tinitreat siya as performance obligation if it relates to the transfer of distinct goods or services to the customer, not treated naman if it is related to administrative tasks to set up a contract. Variable consideration considered variable if the amount of an entity will receive is contingent on a future event. At the start of the contract, a seller must estimate the amount of consideration to which it expects to be entitled on the contract. This estimate is updated at each reporting date until no further consideration is receivable. This is allocated to all the performance obligations unless it is clear that it relates only to the specific part of the contract. Constraining estimates of variable consideration. Estimated amount of variable consideration will be included in the transaction price only to the extent that it is highly probable. Amount of consideration can vary because of discounts, rebates, refund, or other similar items. It can also vary if the entity's entitlement to the consideration is contingent on the occurrence or non-occurrence of a future event. Methods to estimate the amount of variable consideration. First, expected value, some probability-weighted amounts in a range of possible amounts. Second, most likely amount, most likely outcome. Single most likely amount in a range of possible amounts. Example, an entity either achieves a performance bonus or not. Discounts is a given to a customer if the transaction price is less than the sum of the stand-alone selling price of a bundle of goods or services in a contract. It is allocated to all relation and the performance obligation in the contract. However, when there is evidence that discount relates to one or more but not all discount is allocated only to the performance obligation to which it relates. Example of discounts are buy one get one free, contractual discount, early payment discount, and free shipping discount. Sale with a right of return. No revenue is recognized for the products expected to be returned. A refund liability is measured at the amount the entity ultimately expects it will have to return to the customer, and such amount is not included in the transaction price. It shall be updated at each reporting for changes in circumstances. Yung asset, nire-recognize for the entity's right to recover product from the customer on settling the refund liability. Existence of a significant financing component in the contract. Sa isang business, usually ang involved na transaction ay sa point of view ni seller ay ang pag-deliver ng goods or services either nakapagbayad na o hindi pa. Sa point of view naman ni buyer, ang pagbayad in advance or magbabayad kapag nasa kanya na yung goods or na-render na sa kanyang service. In this case, when the customer pays substantially before or substantially after the goods or services are provided, the transaction may contain a significant financing component. In contrast, the customer can benefit if the selling entity finances the customer by delivering the goods or services before payment occurs. Under either circumstances, the selling entity is required to include the effect of the financing component in the transaction price by considering the time value of money. This requirement ensures that selling entities recognize revenue at an amount that reflects the cash payment the customer would have made at the time the goods or services were transferred. Ngayon, kapag merong existing na significant financing component sa contract, sa pagdetermine ng transaction price, it's up to the buyer or the seller kung kailan magte-take effect, and usually nangyayari yung between the time value of money, which in this sense ay nakapag-benefit ang both parties in a sense of having significant benefit of financing the transfer of goods or services to the customer. As stated sa reference, ang pinaka-core principle na pag-adjust ng promise consideration ay ang pag-record ng revenue ay nire-reflect ang cash selling price. Ang cash selling price na tinutukoy ay yung price na dapat na babayaran ng customer. Discount rate ay ginagamit sa pag-adjust ng promise consideration, which can be also identified as the rate that discounts the promise consideration to the cash selling price. Once na nag-start ang contract with regards to the promise consideration, there shall not be updated for changes in interest rates, since yun na nga ang nakapag-agreehan na nakastate na mismo sa contract. Example, sa ABC Corporation ay nakapagbenta ng goods costing 200,000 sa halagang 250,000 sa isang customer na granted ng special credit period of 2 years, meaning pwede niya bayaran in 2 years yung goods. Sinabi dito sa illustration, usually ang ABC Corporation ay binebenta ang goods for 220,000, kaso ang credit period lang nila is within a month or may 5,000 na discount para sa cash on delivery. Sa illustration na ito, ang masusunod dito in determining the revenue is on the usual business transaction of the entity, which is yung nagbebenta sila ng goods for 220,000 less the discount for the freight worth 5,000, 220,000 na normal selling price less 5,000 discount for cash on delivery is the revenue of 215,000. Etong 215,000 is the cash price equivalent of the goods. The 220,000 and the 250,000 selling price constitute a financing transaction. Ang tinutukoy na financing transaction dito ay yung pagbibigay ng credit period. Pero in computing the cash price equivalent, we will use the fair value of the consideration, which is the usual normal selling price of 220,000 less than 5,000 discount on cash on delivery with a credit period of 1 month. Additional concepts related to Step 5, Bill and Hold Arrangement. Kunwari sabi ni customer, seller, hold mo muna, wala pa akong space dito, pero bayaran ko na or singilin mo na ako, yun yung Bill and Hold Arrangement. Habang hindi pa na-obtain yung control, walang mare-recognize na revenue. Kapag naman nakuha na ni customer yung control sa goods, all of these considerations should considered. Substantive reason, na-request muna ni customer na i-hold yung goods ni seller. Goods separately identified. Binayaran na ni customer, so sa kanya na yon. Goods ready for physical delivery. Nag-aantay na lang yung goods na ipadala kay customer. Hindi na pwedeng ibenta sa ibang customer yung goods under bill and hold. The entity cannot use or sell. Layaway sale, purchasing method in which consumer places a deposit on an item to lay it away for later pick-up. It lets the customer make smaller payments on the product until the purchase is paid in full. Ina-ensure na yung customer will get their chosen merchandise once it's fully paid. Bill and hold arrange, the delay is due to customer request. Layaway sale, the delay is due to seller's request. Repurchase agreements, an agreement where an entity sells an asset but retains a right to repurchase the asset. Hindi siya dapat i-consider as sale but rather as loan. Substance over form. Ginawa lang security yung asset, pinalabas niya na binenta niya ito pero ginawa lang security. Example, pag ikaw ay nagbenta sa bangko, tas may tinake out kang loan, sa kanila treatment, repurchase agreement. Repurchase agreement comes in 3 forms. Obligation to repurchase asset, right to repurchase the asset, obligation to repurchase the asset at the customer's request. Put option. Obligation to repurchase at customer's request. Repurchase price lower than the original selling price. If yes, the customer has economic incentive to exercise repurchase option. The contract is accounted for as lease accordance with PFRS 16 leases, pero walang nare-recognize na revenue. Kung no at yung repurchase price equal or more than the selling price, the contract is accounted for financing arrangement. Forward purchase call option. If the repurchase price is less than the original selling price of the asset, the contract is accounted for as a lease in accordance with PFRS 16 leases. If repurchase price is equal to or more than the original selling price of the asset, the contract is accounted for as financing arrangement. Time value of money shall be considered when comparing the repurchase price with the selling price. If the option elapses unexercised, the liability is recognized and revenue is recognized. If repurchase agreement is financing arrangement, the entity shall continue to recognize the asset and the consideration received from the customer shall be recognized as financial liability. Contract modification is a change in scope or price of a contract that creates a new or changes in existing rights or obligation. Contract modification is accounted as separate contract. Both of the following conditions should met. Addition of promised goods or services are distinct. Consideration for additional goods or services reflects their standalone selling price. A contract modification that is not accounted for as separate contract. Additional goods or service are not distinct. Consideration for additional goods or services does not reflect their standalone selling price. Changes in transaction price. After contract inception, the transaction price can change for various reasons, including the resolution of uncertain events or other changes in circumstances that change the amount of consideration to which an entity expects to be entitled in exchange for the promised goods or services. A subsequent change in the transaction price shall be allocated to all of the performance obligation in the contract unless it is clear that it relates only to specific part of the contract. That's all. Thank you.